Welcome to this comprehensive guide on the financial crime investigation lifecycle. We are going to walk through every stage, from the moment an alert first appears to the final closure of a case. Whether you work in anti-money laundering or AML, fraud detection, sanctions screening, or internal investigations, the process follows a common structure. Understanding that structure makes you a stronger, more adaptable investigator. Every investigation starts with a trigger. That trigger might be an automated transaction monitoring alert, a suspicious activity report, a whistleblower tip, or a referral from a regulator. At intake, we log the case, assign a unique identifier, and route it to the right team. But not every alert deserves a full investigation, and that is where triage comes in. Triage applies a risk-based lens. We assess priority, complexity, and regulatory urgency to decide whether to escalate, continue monitoring, or close. Speed and accuracy at this stage protect investigator bandwidth and reduce institutional risk exposure. Once a case passes triage, we move into planning and evidence collection. Investigation planning means defining the scope, setting clear objectives, and assigning roles. A solid plan identifies which data sources to query, which timelines to map, and which regulatory frameworks apply. Planning prevents scope creep and ensures your conclusions are defensible. Evidence collection involves gathering transaction records, account documentation, communications, know your customer or KYC files, and third-party data. Chain of custody is paramount. Evidence must be collected in a forensically sound manner to withstand legal scrutiny. Always verify completeness and authenticity. Incomplete or tampered evidence can undermine the entire investigation and expose the institution to liability. Now we reach the analytical core of the investigation. Analysis transforms raw data into actionable intelligence. You map transaction flows, identify relationships between parties, detect anomalies, and build timelines that tell a story. Hypothesis testing is the scientific backbone of this stage. You form a theory of the crime, then stress test it against the evidence. Can the activity be explained legitimately? If not, what is the most defensible narrative of wrongdoing? Remember, a strong hypothesis is specific, falsifiable, and directly tied to a regulatory or criminal threshold. Stages 7 and 8 bring us to escalation and reporting. First, you determine whether your findings meet the threshold for internal escalation, regulatory filing, law enforcement referral, or account action. This decision must be well documented and defensible. Second, if a regulatory filing is required, whether a SAR, an STR, or an internal memo, you draft and submit it within mandated timeframes. Accuracy and completeness are non-negotiable. Third, you communicate with stakeholders, senior compliance, legal counsel, and relevant business lines as appropriate. Confidentiality is critical here. Tipping off a subject is a serious regulatory breach that can compromise the entire case. Case closure is not simply checking a box. You must document final findings, rationale, and decisions thoroughly. Archive all evidence and communications in the case management system. Regulators may review your cases years after the fact, so completeness matters. But closure is not the end. Post-case actions include customer exit decisions, control enhancements, typology updates, and lessons learned reviews. These actions feed back into your program, strengthening detection and prevention for future investigations. Every closed case should leave your institution better prepared than before. Let us compare the 4 main investigation types. AML investigations focus on detecting money laundering and terrorist financing. They are driven by transaction monitoring alerts and KYC reviews, with SAR or STR filings as the key output. Fraud investigations focus on identifying deceptive schemes causing direct financial loss. They are often time-critical and require close coordination with operations, cyber teams, and law enforcement. Sanctions investigations screen for prohibited parties and jurisdictions in a zero-tolerance environment. Potential matches require rapid assessment, escalation to bodies like OFAC or HM Treasury, and possible blocking of funds. Finally, internal investigations address employee misconduct, policy violations, or insider threats. They involve HR, legal, and security, and evidence standards must anticipate employment tribunal or criminal proceedings. Despite their differences, every financial crime investigation demands a common set of professional competencies. Critical analysis, connecting disparate data points into a coherent, defensible narrative. Clear communication, translating complex findings into precise, regulator-ready reports. Regulatory knowledge, understanding the legal thresholds and filing obligations governing each case type. And professional integrity, maintaining objectivity, confidentiality, and ethical standards throughout. Investing in these core skills creates versatile investigators who can pivot across AML, fraud, sanctions, and internal case types. That versatility is what separates good investigators from exceptional ones. Take these principles forward into your daily work, and you will navigate the full investigation lifecycle with confidence.